There is a ton of speculation in the housing market right now, and Ann Arbor is not exempt from it. When you look at the charts of the prices going up and up and up year after year after year, you start to wonder, is this the law of nature? What goes up must come down.
What goes up must come down.
Well, we're going to take a deep dive into the housing market in this video, kind of unpack what we're seeing from a price perspective, days on market, and we're going to really get into some numbers here. So if you're here to look at the housing market at a deeper level, I got some great information for you. But if you're just here to kind of get an overview on what the housing market is like in Ann Arbor, then stick around because we're going to be doing that too. We're going to be covering the housing market, we're going to be covering interest rates, and we're also going to be taking a look at how to win as a buyer in today's market and how to win as a seller in today's market despite what's going on. So make sure you stick around to the end because we're getting after it right now. All right, so before we start geeking out on some numbers, if you're new to me and new to my channel, my name is Eric Meldrum. I make videos that are all things Michigan. We cover Ann Arbor and Metro Detroit, and my team and I have helped hundreds of people just like you buy, sell, relocate, and invest here in Michigan, and we absolutely love it. So if you are considering a move here to Michigan, definitely get a hold of us. My contact information is down below. So when looking at the housing market here in Ann Arbor, we have to look at the data that's in front of us. There's some public data and some data that we pull from the MLS. So I'm going to take you behind the scenes. And if you've watched any of my past videos about market updates, you know I'm big on transparency. I always hop into the MLS and show you guys exactly what's going on. So this data that I'm going to show you some from Redfin, which you can access on your own. But I'm also going to show you the tools that we use, here in Ann Arbor to understand what's going on in the housing market. So these are actual closed homes, actual pending, actual sold. This is coming straight from the MLS. All right, so the first thing I want to start with is the local market report. Now, this is directly from the MLS. This is covering Washtenaw County, and this is looking at 2022 compared to 2023 in October. November's data is not out yet. Otherwise, I'll pull that up. I will do an updated video on that as the November data does come out. So stay tuned and check back to the channel for that information. But as we look at October, this is some leading indicators coming into the winter months here in the market, and naturally we always see a little bit of a slowdown, right? Thanksgiving, Christmas, not as many people are out looking. It's winter here in Michigan, so we're going to naturally see some slowdown, and this is seasonality to its finest, and this happens all over the country, but Michigan and the Midwest specifically, we see a little bit more of a dip than places like Florida or California, just due to nature of the weather, because let's be honest, if you had the choice of moving in the winter versus the summer, which one would you pick? I mean, I think I can guess. But there are some pros and there are some cons to moving in the winter. I would say the pros do outweigh the cons. And if you want to know what those are, just ask me. All right, so the new listings coming to market, 266 compared to 262 last year. That's up 1.5%. Pending sales is down 5.8%. Closed homes, right? These are actual sold closed homes, is down 3% from last year. Days on market is down, so we're starting to see a little bit more movement in the market. People are selling homes quicker, and I have a reason for this, which is the inventory. Okay, so when you look at the amount of inventory in the market in 2022 compared to today, we went from 701 to 514. Now, if we're looking at the average sales price for residential homes, this is coming in at $439,000, which is up over 5.5% from 2022. Same thing on the condo market. If you are looking for a condo here in Ann Arbor, this is broken out from residential to condominiums. Average sales price of a condo went up 6.9% from 351 to 376. Compared to last year. So we get a good barometer of what the market's doing, and I'm going to take you in and look at some additional stats on this. But in terms of the update, same thing with condos. We have low inventory. Okay, this is down 15.7%. So 26.7% on residential homes, 15.7% on condominiums. Okay, so that's a really big drop. Considering 2022, we didn't have much inventory, and you'll see that in the charts that I'm about to show you. So I want to dive into some of these details because it's really important to understand not just all these numbers. And at any point in this, as I'm going through this, I tend to go through it a little bit quicker. If you do have questions, just drop those in the comments below. This is something we do with our clients to get them understanding of the market anyway. So if you do schedule a Zoom call with us, we'll go through these numbers so you can at least see what's happening. And you might be asking yourself, are prices going to come down in Ann Arbor? And we're going to get to that. Average sales price is the chart that we're looking at right now. And this is going back 10 years. So going back to 2013, you can see in Washtenaw County, which is largely comprised of Ann Arbor, average price of a home was $215,000 10 years ago. Okay, fast forward to today, $472,000 in Ann Arbor. Okay, now that has gone up quite a bit, right? But from last year, it's gone up 4.9%. So you can see this big increase coming from March 2021 into present. Okay, and this was really when things were going gangbusters in the market. So this is all explainable. Interest rates were at a very low percentage at this point. Okay, they're at 3%, maybe even 2%. So if you did get a 2% interest rate, congratulations. You have struck gold in this. This is now a commodity. And if you have this, don't let it go, right? Make sure you hold on to that forever. That could be a rental property for you. Or if you're even at 3%, hold on to that, right? So now people are trying to figure out, how do I even get those? Can I assume those loans? Can I, can you just give it to me and I'll rent it? There's a ton of creative stuff going on in the market, but I want to keep flowing with this because sales price has gone up quite a bit, right? We're now at a 472 average price and you can see this big jump. So we're going to start seeing what's causing this. So the question that we're going to ask ourselves as we're going through this is, can prices continue to go up? All right, that's the main question that a lot of people have. And you might be one of those folks that keep looking at this and saying, Eric, when will prices actually level off or come back down? Now, interest rates have been at 7-8%, for some time now. And naturally people are like, well, as interest rates go up, prices come down. It's a little bit more complicated than that. And it's really has to do with supply and demand rather than the interest rates and home prices. When you have high supply, then prices can come down. When you have low supply, then it means a lot more demand for the fewer amount of homes that we have in the market. Prices are going to continue to go up. So this is one indication that prices have continued to go up because there's demand there despite the interest rates. Now, when we look at the supply, new listings have really just kind of fallen off a cliff. Okay, when we go back and look even into 2020, we were hovering right around this 4,000 to 5,000 homes coming to market in Washtenaw County. We get into post COVID pandemic and things start dropping. Okay, homes don't come to market that quickly, and now we're down to historic lows, right? Over the past 10 years, historic lows for new listings coming to market. We're below 3,500. Okay, last month we only had 3,316 homes come to market. That's down 17.2%. Okay, so we're starting to see listings basically fall off a cliff here. Number of homes for sale. This chart's going to look very familiar. Basically, like new listings, is we were hovering right around 1,400 homes, then we get into 1,000 homes right around here, and then boom, we're down into like the 500-600s, and that's where we're hovering as of today of homes for sale in Washtenaw County. Now, transactions are still happening. We're still having homes go pending, but not as many of them because there's not as many homes on the market for sale. So we can see pending homes, back in the 2016-17s, they were between 3,800, 4,000. Then we had a little bit of dip here. This is an interesting one because this is when the real estate market shut down due to COVID restrictions. Okay, this is basically plummeted because in April they said nobody can show homes, so no homes could go pending. Nobody was making offers on them. It was a weird time, and then boom, things break loose, and we get a bunch of homes going pending in May of 2020. And then it shot up, right? People are buying like crazy, despite the low inventory. It was basically just chewing up what was on the market. And now this is very low. Okay, this is very low. Pending sales have basically fallen off a cliff. In November 2023, 2,800 homes have gone pending. Okay, and you can see historically, we're usually hovering around 3,600 homes would be the average of all this. So this has dropped 15.4%. Okay. So we are getting to some conclusions here, guys. So just stay with me. On the closed sales, same thing. This chart looks very familiar, right? Pending sales equals closed sales. So this has fallen off. Now we're getting a health report on the market right now. And what this is indicating is that there are very few homes for sale. Okay. There's still a lot of demand out there. Homes are still going pending, and prices are going up because of that, right? Because of the demand, because of the low inventory, despite interest rates, what they're doing, we'll look at those separately. Despite all those factors, home prices continue to go up because there's no inventory, right? You might be asking yourself why, like what happened and why is there no inventory? Well, when we look back at the number of new listings coming to market, well, this is a good indication. Normally people are transitioning into an upgrade or a downgrade. And with those transitions, usually comes a new mortgage if they're not paying out cash outright for those homes. And a lot of people wanted to forego that based on their current interest rate. So if you're one of those people who refinanced during 2020, 2021, well, we call this the lock-in effect. You are locked into a low interest rate and you have no motivation or no incentive to upgrade or downgrade your home and get into a higher interest rate if you need to finance. That makes no financial sense. Now, the people who are moving are the people that may have their house paid off outright, right? And they're selling that, buying the next house cash. People that have liquid funds to, go buy second homes, investment properties. Those are a lot of the transactions that we saw during that time frame. Now, the one thing that we don't see in these charts, which I have, firsthand experience with, is having conversations with hundreds of buyers, and understanding what their motivation is for either pausing or waiting in this market. And a lot of those conversations have really boiled down to, just that is like, we don't want to overpay for a property. We were seeing this in 2021 when people were thinking, well, $20,000, $30,000 over asking. That seems like we're getting into a bad financial decision. And then prices kept going up, and now home affordability, is out of reach for some of those people that were looking, or their budget has severely dropped, due to interest rates. So it's really interesting as we look at these things and try to make sense of when is a good time for you to buy or what is a good time for you to sell. Well, it's always when you're ready, right? There's no perfect time because we don't know. We didn't know in 2020 or 2021 that prices were going to keep going up. We knew over a long period of time, history has shown us real estate as an asset class is a good investment and it will appreciate. How rapidly over the years, to be determined, right? A lot of factors involved in that. So just keep that in mind as we're going through this. The market is driven purely off of the supply and the demand. All right, so next, let's take a look at the interest rates and how that's affecting the housing market and buyers in today's market. Now, this is over a 10-year period. So from 2013, rates were hovering right around 3 to 4%. And we got the dips back in 2018, 19, we were up into like the 5s. And then this was the poison pill. Okay, this was the major poison pill that really startled the market. And this gray line here, if anybody's wondering, this is a recession marker. Okay, so the Fed looks at this and says, we're in a recession at this point. So just an indicator, and despite this, interest rates did come down, but then they went right back up and then they came back down again, during this little blip of a recession back in 2020. So this is where it bottoms out. Okay, if you were somebody in 2021 that got a 2.6% interest rate, congratulations. Again, you are sitting on gold. We will likely never see those in our time frame ever again. But then it started really taking off, into the 5s, 6s, all the way up into the mid 7s, and it reached an 8% interest rate, at some point as well. So looking back historically, I think it's good to kind of look at history. When were interest rates this high, right? Because I've heard a lot of people back in the 80s say like, well, we bought when the interest rates were 11, 12, 13, and even in this chart, it shows 18% at its peak. Now, I'm not going to argue that 18% interest rate is absolutely insane, and it is. If you were somebody who got an 18% interest rate back in the 80s, drop that in the comment below. I would love to know what your interest rate was in the 80s. But the biggest difference between the folks who bought in the 80s to today, just as an affordability perspective, things cost less in the 80s compared to today. When you look at the cost of gas, look at the cost of food and other things that we are paying for outside of housing, this is where a lot of the money is going for people. And it's not a matter of not being able to afford a house. It's not being able to afford a house and a car, insurance, food, and all the other things that we have to pay for on a daily basis. So when we look at the core inflation, that is playing a big role in affordability for most people. And the Fed's got that interest rate where they got it. They're trying to hedge inflation right now, but it's becoming one of those things that we really need to take a look at. So we got to take that into account when looking at mortgage rates. And ultimately, the question that we're trying to answer out of all of this is, what is the likelihood of interest rates coming down versus home prices in Ann Arbor coming down as well? Or are they going to continue to go up? And we're going to dive into that right now. All right, so we're looking at the existing home sales versus mortgage rates in the US. Now, it's very easy to kind of put these two together and correlate. Interest rates have caused home sales to basically fall off a cliff. When interest rates were very low in 2020, 2021, home sales went through the roof. Now, the complete opposite thing is happening right around this point here. We started seeing interest rates go up and home prices started falling basically off the cliff here. So the inverse is happening. Now, what we're not seeing in this chart is the fact that had interest rates stayed consistent, right? If they stayed consistent around 4 to 5%, we probably would have seen this consistency of home sales, right? And we would have been in an equal market, coming through 2020 and 2021 up until, present. So what this is telling me, and what I want to point out here, is that all of these home sales that have fallen off, there are still buyers on the sidelines waiting to buy. Okay, and you know this firsthand because if you've been home shopping, multiple offer situations are happening in most major markets still. There's still homes that are going super quickly. The turnkey homes that are move-in ready, those are still going super quickly despite the interest rates. So there's still a ton of demand out there and that hasn't gone away, right? And that's the big picture looking right now, is demand is still out there. A lot of people have just paused. They've taken a step back and said, hey, we're going to wait for something to happen. Either interest rates come down or home prices are going to come down. And my prediction on this is that interest rates are going to come down, but home prices are going to either stay consistent, if not rise into the future. There will have to be some major event in the economy to happen outside of the housing market to cause home prices to get shaken up. And even if that does, I don't think that's going to solve the housing shortage that we have and all of the demand that we have sitting on the sidelines. All right, so looking back on 2023, there's a lot of things that I think we can take away to see what the market's going to do in 2024, specifically here in Ann Arbor and the Metro Detroit area. I shared my predictions on what I think is going to happen, with home prices, with interest rates. But, in today's market, going into 2024, buyers and sellers are really trying to figure out how to navigate this landscape. And, I want to be the best resource for you guys. So if you are making a move here to Michigan, these strategies are definitely going to help. So make sure you kind of write this down and understand specifically what's going on, depending on the time frame that you're moving, whether it's early winter in 2024, maybe the spring or summer, the market could change. So always feel free to reach out, get an update on what's happening in the market. I'll keep posting these videos on the channel here. But as a buyer in today's market, you want to be on the lookout for opportunity, and there's still a ton of opportunity in the market. Sellers are still looking to sell. All right, a couple things happen, despite the economy, despite the interest rates, it's the less sexy side of real estate, right? This is the death, divorce, right? Distress on the home. And we're starting to see a little bit more of that. I hate talking about these type of things because it's kind of the doom and gloom, but it's the reality. It's the world that we live in. People are going to have financial hardships. People are going to have, distress in health, or, divorce in their family, and death, ultimately happens when we least expect it, so these things are still going to happen. Those are still opportunities for buyers, right? Some of those homes that are getting sold, they may not have been updated for 20, 30, 40 years. And a lot of the buyers that are out there looking right now saying, I want turnkey, right? Because of the interest rates, those are still an opportunity for you to go in, maybe give a full price offer, and write this one down, right? Giving a full price offer and then asking for a concession to buy down your interest rate is more impactful. Trust me on the numbers here, is more impactful to the bottom line than offering $20,000, $30,000 less than what they're asking on the market. Okay, I ran the numbers 6 ways from Sunday, and it always works out that if you can decrease your interest rate, you're going to decrease your mortgage payment. So that is a way to win in today's market. And then as a buyer, just make sure you're looking at all opportunity in the market. Homes that have been on the market 30, 60, 90 days plus, right? Some people may have just disregarded those just because of the time frame they've been on the market, and there might be nothing wrong with it. Who knows? They could have had a contract fall out because the buyer couldn't get the financing, and now the property's got a mark on it that says, well, it went under contract, it came back to market, right? There must be something wrong with it. Okay, so most people just disregard that. Don't disregard that. Do your own due diligence and look into those properties. I've found countless clients, homes that have been on the market 60, 90 days, and they are absolutely in love with them because they were just discarded by other people. And then as a seller in today's market, don't let this market fool you. Just because there's low inventory and there's a lot of demand out there doesn't mean buyers are just settling. Okay, all the repairs that you're thinking about putting off or just listing as is, you definitely want to make those repairs. You definitely want the property to show as well as possible. So go through, and we have a process for this. We come over for our listing appointment, and we're going to go through room by room, and we're going to go through decluttering, depersonalizing, and deep cleaning everything. And then we're going to bring our stagers in, to stage the home. And this really does matter. Okay. Getting the home in the most pristine condition to bring to market is going to give you the best opportunity to get multiple offers the first weekend on market. Getting your home in the best condition possible will allow you to open up to more buyers that are potentially going to come through your home and make you an offer. Now, when it comes to selling it, don't cheap out on not hiring a real estate agent. If you are trying to sell it by yourself, just because there's low inventory, still consider all the things that I just said, right? That's your right to sell it on your own. I'm a big advocate of marketing the homes and getting it to the most amount of people possible. And the reality of it is if you're not listing on the MLS, you're not listing with an agent, you're limiting the exposure of your home, ultimately potentially hurting, what you could get for that price of the home or the amount of offers that you will receive. So make sure you're speaking with my team if you're considering selling, because we bring a whole new marketing plan to listing your home than anybody else in the market. We're doing video, we're doing high quality photos, we're doing social media campaigns that are going to drive eyeballs to your home. And I can assure you, knowing all the agents in this market, not a lot of them do it. We are one of the only teams that focus on it heavily, and that makes a huge difference when selling your home in any market. All right, you guys, so just to recap, we talked about the market update here in Ann Arbor. We talked about the mortgage rates. We talked about tips for buyers. We talked about tips for sellers. And just to summarize everything for you, in today's low inventory market, interest rates are high, inventory is low. A lot of folks are waiting for something to happen. A lot of folks are waiting for interest rates to come down or home prices to come down, to make things a little bit more affordable. But with the high demand still pent up on the sidelines, when interest rates do come down, I am predicting that the home prices are going to start going up, because once those rates hit that level that people are feeling comfortable, they can re-enter the market, they're going to start buying properties. They're going to be bidding wars again, driving those prices up and being more competitive. So here's my last tip for you guys. If you are considering buying or selling in 2024, do consider doing it early on before all the craziness happens in the summer. So if you do have questions about anything I covered in this video, feel free to reach out. I would love to have a conversation with you. And until next time, go check out these other videos on our channel that are all things Michigan, and we'll catch you on the next one. Peace.